So I think, by default, the odds are stacked against a business owner from a tax perspective, right? The tax system is not set up to have you pay the least amount of taxes because, it's just not the way it is. Unfortunately, it's our job as tax advisors to learn all the facets of the code and understand the different strategies that can be employed to help tip the scales back in the business owner's favor. Okay. There are a lot of different things that we can do from a business owner's perspective and from a business perspective to help a company be tax efficient. And it's not a one size fits all thing, but certainly there are strategies that we can employ that are consistent. But the single most important thing is getting in the right business structure, choosing that right business entity. So we like to try to be involved in that discussion very early on when somebody's thinking about setting up a business or, starting a new business. Maybe they're looking at buying a business. They want to know how to kind of put it into the right entity. If you miss, you can miss badly. And so that's something that is very important to understand. What are the ramifications of the different ways an entity is taxed? And so depending on what the purpose of the business is, it's going to dictate which entity is the appropriate structure for that. And, that's going to, again, depend on the situation.
So let's talk about S-Corps, because you hear for some people, they're really great setups, really great entities to jump into. And for other people, it's just not a good fit. And so why do you feel like maybe an S-Corp could save people money on their taxes?
S corporations from a tax standpoint are generally going to be good for an operating company. Somebody that has a business that makes something or sells a service or something like that, because with an S corporation under the tax structure, you can dictate how you take money out of the business. Typically you have wages that are paid to the owners in the form of reasonable compensation. But then there's also distributions of profits that come into play. Hopefully the business is profitable, right? If you don't have the S corporation structure, by default, everything that you make in terms of profit is going to be subject to federal and state taxes, but also Social Security and Medicare taxes, the payroll taxes per se, and that's 15.3%. So if you miss or don't get it right, you could be overpaying your taxes by about 15.3% on a bunch of income. And so the S corporation structure from a tax perspective is good. Now, one of the things that we tend to do when it comes to advising clients is, steer them toward what's called an LLC, limited liability company. And a limited liability company is probably one of the best structures for an operating entity because it has the most flexibility from a tax perspective. With a limited liability company, you have a little bit less record keeping as well, but you can choose how you're taxed from a business perspective. And so you can have an LLC that is taxed like an S corporation, and it gives you a couple benefits. So the S corporation on its own has a little bit more record keeping requirements there, whereas the LLC has fewer requirements. And in some states, the LLC is not a structure that's approved, but in most states it is. So we tend to steer people to that LLC taxed as an S corporation status because that's going to be the most efficient.
So everyone wants to know, gosh, how many times have we heard this question? How can we minimize self-employment taxes? So explain the strategy behind paying a reasonable salary and then taking distributions and how that can help us.
Yeah. So when you have a business entity that is an S corporation, for example, and let's just say you have $200,000 in profit and you do work for that company as an owner.